Hello, we are Team PetroChina and today we are exploring the impact of energy prices on our company. In order to do so, there are three predictions we have to make. The first one is the oil price. Then we identify two variables, which is the share price and the total crude output of our company that we are going to predict. But first, let me give you a little introduction to our company. PetroChina was founded in 1999 and is the largest and dominant producer and distributor in the oil and gas industry in China. It is headquartered in Beijing and it is the most profitable company in China. The stocks of our company are traded in Hong Kong, New York and Shanghai. In order to predict our first variable, the share price, we're going to use the Hong Kong stock market. The recent fall in oil prices have been a dramatic impact on our company. Whereas on June 2014, a barrel was traded at around $100, now at January the 23rd of 2015, the price has fallen by more than half to $49 a barrel. In recent days, it has gone slightly up to about $55 a barrel. The slump in oil prices was due to low demand, which itself was due to weak worldwide economic activity and less demand from one of the biggest oil importers, the United States of America, because they increased their level of shale oil production in the United States, which we'll come to later. The second factor that created that crush in oil prices was the high production of oil producing countries. In order to predict the oil price at the end of 2015 and 2016, we first had a look at the opinion of experts in the industry. Looking at a variety of different experts, we found a range of prediction for the end of 2015 from 50.4 to $80 a barrel. The range is different in 2016 from $58 to $90 a barrel. Now, having had a look at the arguments of these experts, we were able to extract four major factors which the oil price is gonna depend on. The first one is the elasticity of demand, which basically means that the cure for low oil prices is low oil prices itself. The second one is supply of US shale, which we come to in more detail in a second. Third one is worldwide economic growth, and fourth one is OPEC decisions. In addition to that, the oil price can severely be affected by wars in oil producing countries, but this is very unlikely, and in order to make our predictions, we have excluded that factor, assuming that there is not going to be any war affecting the oil price severely. Our predictions at the end of December 2015 were $55 a barrel to $80 a barrel. For the end of December 2016, we predicted the oil price to be somewhere between $65 a barrel and $105. In order to do so, we considered these major factors and adjusted the expert opinion according to our own opinion. We can see in this chart that the worldwide economic growth and oil consumption is quite closely correlated. Oil consumption and oil price on the other hand is again correlated. So this means economic growth is gonna affect the oil price. The second factor we looked at was shale oil. Due to the high oil prices and the involvement in technology, the United States of America were able to produce a lot, to increase their shale oil production a lot, and therefore put OPEC countries under quite a lot of pressure. Therefore, they have reacted and increased production, which led to a decrease in the oil price, which we saw. This, on the other hand, is going to make it harder for US shale to produce oil because their marginal cost of production might be higher than the actual revenue, which means that they're gonna make a loss. Therefore, the US shale oil production has decreased in the last few months. OPEC, on the other hand, might not be able to handle such a low oil price for a longer time because they severely depend on the revenue created from oil sales. Saudi Arabia, for example, Saudi Arabia's budget, for example, is 92% dependent on sales in oil. So here's an influence diagram of how we predicted our first variable, the share price. Now, we looked at the historical data, the expert predictions, formed our own arguments about the factors influencing the oil price, and came to a prediction for the oil price. We're going to use that and another factor which we identified is crucial for PetroChina's share price, namely the economic activity in China, to predict our share price. Now let's go into more detail. As I said, the Chinese economy and the oil price are going to be two major factors that we are going to consider. However, there are more factors that are going to affect our share price. For example, the company's future strategy and investor sentiment. But these are not that main. They are not main factors, and therefore we're only going to focus on the Chinese economy and the oil price. Why we're focusing only on the Chinese economy is because our sales level is heavily domestic focused. We can see here that we sell 90% of our oil in China and 95% of our natural gas. So in this diagram we can see that the crude oil price, represented by that line here, and our adjusted closing share price, which is represented by the shaded region, are closely correlated. Actually, plotting these data points in Mathematica in R gives us a correlation of 90.4%. So, with that data, we created our first model with linear regression, and we extracted the coefficients from R, and inserting these variables in the model gave us the following intervals. For the end of 2015, we had a predicted interval from $4.75 a barrel to about $7 a barrel. For the end of 2015, it predicted us an interval from about $5.6 to $9.2 per barrel. And also considered the GDP of China as a factor of economic activity in China. By considering this factor, we extended our model using multiple regression. By doing so, we got a new low value for the end of December of 14.88 and a high value of 16.51. For the end of 2016, the interval would be between 15.5 and 18.1. We then combined these two models using advantages of both and came to our final predictions for the share price. In 2015, we predict the share price to be in the range of $9.81 to $11.75 on the Hong Kong stock market, and similarly for 2016 we expect it to be between $10.58 and $13.68. Here you can see our share price prediction visually demonstrated. Today's share price is $8.59, and we reckon that at the end of 2015 the share price is going to be slightly above, and at the end of 2016 we reckon it's going to be even more valuable, meaning even higher. But just to give you a quick overview of what we did, basically we took our prediction for the oil price at the end of 2015-2016, combined that with our linear regression and multiple regression model, took an average of that, and ended up with our predictions for the share price at the end of 2015 and 2016. Moving on to our second variable, the total crude oil production, we identified 4 factors that's mainly gonna impact our total crude oil production. This is the oil price, the Chinese tax policy, domestic demand, which is itself influenced by the Chinese economy, and the company's future strategy. We again decided to only focus on the 2 major factors, the oil price and the domestic demand. We plotted our production for every half a year between 2006 and 2013 and compared that to the oil price, and found out that their correlation between them is 65%. We then did a linear regression line and came to the following equation here. Using this linear regression, we came to the following intervals. For the end of 2015, we had a predicted value of 418 to 433 million barrels, and for the end of 2016, we got the interval between 424 and 449 million barrels. Again, we extended our model by using multiple regression. This is adding the economic activity of China, the GDP, into our model. However, the GDP is annually, so therefore, after having found these values, we aggregated them with our linear regression model to again combine these 2 models. And as I said, the GDP is yearly, so that's why we divided it by 2 here. So overall, we got to a predicted interval between 456 and 427 at the end of 2015, and similarly for the end of 2016, our predicted interval was 468 to 479 million barrels. To conclude, our predictions for the end of December 2015 are an interval between $55 and $80 per barrel for the oil price, a value for our adjusted close share price of PetroChina between 9.81 and 11.75. Our level of production is predictably going to between 465 and 472 million barrels, and similarly for the end of December 2016, we predict the oil price to be between $65 and $105 per barrel. Our adjusted close share price between 10.58 and 13.68, and finally we predict our level of production for the end of 2016 to be between 468 and 479 million barrels. Thank you for your attention.